Celsius itself is a very differentiated brand. It's got a unique call to action in the energy space. I love skiing. Red Bull's got a great presence in the extreme sports, but Celsius really found their way in the fitness space, and it's been known as a better for you and healthier brand, and has developed like highly recurrent behavior with their customer base. Last year, at around this time, they purchased this upstart but really fastly growing energy drink brand called Alani Nu, and we'll talk a lot about that in this presentation. So, with those two brands are the core of the Celsius Holdings umbrella, and Alani is a very differentiated asset in its own right. Each Celsius and Alani catering to a unique customer base. And what I'll really emphasize is that these are customer bases that historically have not been energy drink consumers. So while energy drink as a category has good structural growth behind it, these brands are not competing with the incumbents, Red Bull and Monster, but rather they're growing the share of the industry and they're mainly competing with coffee or other sources of caffeine, but mainly coffee. So I think that's a very different call to action than one might presume in what some view as a crowded space or a space dominated by a couple of very large players. And the valuation for the growth rates here, I think, are very reasonable. Just quick and dirty, this is a brand growing top line organically upwards of 20%, and it's trading at 17 times EBITDA now. I was hoping I could say a lower number, but shares have rallied a little bit in recent weeks. Even still, I think 17 times, just to contextualize that, and I'll talk more about it later on, that's been the low end of Monster's valuation over the last decade. So if you believe this is the third great brand or umbrella of brands in the energy space, that's a very reasonable valuation, and you could get very good returns from here. And then, Pepsi is a really critical partner with Celsius. Pepsi in August upped their investment in the company. They own about 11% now. 8.5% was taken a few years ago at a $25 per share. More recently, the other 2.5% was taken at 51.75 a share. Celsius actually traded decently below Pepsi's original purchase price a year ago, right around this time. So I think that was pretty interesting. And then what I'll leave open as a call option here is that the company has less than it has a de minimis international position, but they are putting together the pieces to grow internationally. And for Monster and for Red Bull, international is a very big piece of the pie. So with Celsius having almost no international presence today, that could be a very strong growth pillar that the brand could leverage into the future. So I want to talk about why this opportunity exists, and I think that's an important question to ask. It will tap into the risks here because the why is related to the risks. But it's something I like asking myself, like why is there an alpha opportunity in this investment, and what might make this what a lot of times I think Modest Proposal has this great tweet. It's the known risks that get you. So let's put some of the known risks up front. But let's also talk about the recent past in narrative form. Shares of Celsius peaked at just shy, we're talking pennies shy, of $100 a share in the spring of 2024, and it's at about $50 a share today. So it's half of where it was at peak, but it bottomed in the $18 range, so over 80% off peak just last year. So shares have more than doubled since the bottom, but they're still down by half since the peak. And what happened is getting onto the Pepsi rails was like rocket fuel for Celsius growth. It had been growing very quickly and grew even faster once Pepsi took the brand and took over distribution. When growth slowed at point of sale, it caught Pepsi by surprise. It caught Celsius by surprise. And while the brand was still growing nicely, they had been feeding the channel with supply predicated on much faster growth. So Pepsi last year in the second and third quarters basically stopped taking on any new stop buying in more Celsius. So that really hurt the brand's growth. And although it was growing at retail still, top line growth basically came to a standstill. And while shares have recovered from those pains, more recently, there was again a big slide after Pepsi had re-upped their partnership to expand the scope of it. What happened was in the company's quarter 3 2025 report, they guided to slower growth as they were supposed to take Alani into the Pepsi distribution system. And investors had deja vu, having been scarred by what went wrong with Pepsi the first time, and feared that we might be looking at another instance of some sort of channel wonkiness and mismatch between sell through and sell in. But the reality, and the company is emphatic that this is not the same. These forces are a little different. And it looks like scanner data actually improved throughout the quarter. And so sell in is really should be more closely aligned with sell through, especially as we get to Q1 of this year. So throughout the year as well, Celsius purchased their own manufacturing that was viewed as a problem. In the very beginning of last year, they made the acquisition of Alani Nu. Alani Nu was seen as a potentially formidable competitor because Alani Nu and Celsius are the two most prominent brands in the space with women in particular. So it was viewed as a form of overlap where there were questions as to whether it was an offensive or defensive acquisition and whether growth of one would be cannibalistic to the other. So that was a problem. And then also Monster and Red Bull increased their competitive offerings. Monster created a new brand to try to compete with Celsius in the better for you category, and Red Bull increased the velocity of their product in the no sugar space. These were the problems that created the sell-off and the opportunity in Celsius.